All right. So, ladies and gentlemen, we gather again today with Bimal sir, and today he'll be not just be covering GST, but today we'll be discussing about the summary of the budget that we had on 1st of February. And Bimal sir will walk us through as to what holds for salaried people versus businesses versus the business owners and respective field owners as well. So, but I know many of you are regular webinar viewers, but for those who have joined for the first time, for them, I would love to introduce Bimal sir. So, CA Bimal Jain is a renowned chartered accountant, a member of ICAI since 1994, with an exceptional reputation for his expertise in tax, laws, compliance, and financial strategies. With over 22 years of experience that he has been a driving force in shaping and influencing India's taxation landscape. His vast knowledge and profound insights into the ever evolving tax regulations have made him a sought after authority in the industry. Not just speaking about what he has done in his career as well when he was a student himself. So he has a bachelor's degree in law and a qualified SAP financial control consultant, plus 18 years of working experience in companies like LG, Honda, Hindustan Development Corp, and now an executive director of A2C Corp, with the help of which he visits us through our webinars, and sometimes he promotes uh, Zoho, or rather the accounting subject, through our GST dinner as well. So the legendary Bimalji is having hands-on experience in providing opinion and advisory services, carrying diagnostic of business operations review, structuring of business model, undertaking litigation services at all appropriate forums. Bimalji has also been a keynote speaker at Guinness World Records, made by ICSI, in the largest taxation mission on GST, which was graced by 4,500 participants, breaking record of Japan. So he's not just a accounting hero, as we say in our fraternity in India, but he is having names internationally as well. But without much ado, I will not take much time now, and because the introduction of Bimal Jain will take another 2 to 5 minutes, since we are covering a very important topic. So I will leave you for now and will give all the viewers in the hands of Bimal sir. So Bimal sir, over to you.
At the outset, let me thank Hers and Zoho Books for taking this initiative for discussing important changes in Union Budget 2025. And today, I'm going to discuss even income tax, of course, with GST. So let me start with, see, this year budget is really a remarkable one. And you can see it is opening up Pandora's box for Aam Aadmi, middleman. Just brief background that our Honorable Finance Minister is targeting GDP to grow by 6.8%. And she is working on fiscal consolidation, lowering the amount of borrowing and then interest obligation. Thereby, she has projected that our fiscal deficit will go down to 4.4% of GDP as against 6.7%, which was in financial year 21-22. Having said that, this year budget is a 54 lakh crore rupees, out of which revenue collection, if you look at the collection which is coming out, is a 50 lakh crore rupees, and revenue receipt would be around 34 lakh crore rupees. So this is a brief background, and 4 important engines are identified for Viksit Bharat. Engine for the development: agriculture, MSME, investment, and then export. So this is a brief background in terms of how we are heading towards. And 6.8% GDP growth, we are bestest emerging economy, you can say that. And definitely the target and vision H, Viksit Bharat by 2047. Let's see. So today I'm going to discuss the important changes in income tax, GST, and custom duty, all 3 together. And that too with PowerPoint presentation, so that you would be comfortable to look at the changes numbers which I'm talking about. And this PPT would be available to all the participants, those who are watching this webinar on Union Budget 2025. Let me share my screen first. Let me start with the very first slide. What I'm going to discuss, as I said, the changes in direct tax, followed by GST and then custom duty. In income tax law, I'm going to discuss the important change for the personal income tax under new tax regime, slab and corresponding rates. I'm going to discuss rebate which is being given under section 87A, how this 12 lakh which is being announced by Honorable Finance Minister, and there will not be any income tax. So we will discuss that component as well. Changes, rationalization rather, in TDS threshold amount and the rate, TDS and TCS, including other important changes under income tax. Let me start with the very first change. There are two regimes going on, old tax regime and new tax regime. Old tax regime will continue as it is, no change, and nothing is being stated, but the way the new tax regime is getting transformed, it is now important that we should move from old to new regime. As per new regime, per last year, there was no income tax if income up to 7 lakh rupees. With the jump of 5 lakh rupees over and above 7 lakh, it is now 12 lakh rupees, no income tax. If you are salaried class, your income coming from salary, then it is 12.75, 12 lakh 75,000 rupees. Why 75,000 extra? Because of standard deduction, which is available in new tax regime. So up to 12 lakh 75,000, no income tax. And they have revamped the slab also, income slab and corresponding income tax rate to give you the much needed relief. So this slide is talking about what was the new tax regime until last year, which is going on 24-25 financial year, and what would be the proposed, wherein you will get complete exemption, no income tax, up to 12 lakh rupees for salaried class, 12 lakh 75,000. And this threshold is applicable for all except those who are chargeable to special rate capital gain. So new regime, you can look at the slab also. There is a change in the slab. So I made the comparison of new slab last year, which is going on, and a new slab for the proposed financial year 25-26, applicable from 1st April 25. So there will not be any income tax up to 4 lakh rupees while comparing the last one, 3 lakh rupees. And then the slab is divided into 4 lakh rupees each, 4 lakh to 8 lakh, 5%, 8 to 12, 10%, 12 to 16, 15%, 16 to 20, 20%, 20 to 24, 25%, and then above 24 lakh, it is 30%. So look at, as per last year, it was above 15 lakh, 30%, but now it is 24 lakh. So who all are going to get benefited while we do the comparison? Let's look at the comparison. And for looking at the comparison, this slide is important. You know that as per last year, 3 lakh was the limit, no income tax. Now it is the 4 lakh. And for reading this particular slide, it is very important to note there is a rebate under section 87A. And that rebate gives you the benefit. Like under old tax regime, up to 5 lakh, no income tax. But with the calculation of rebate under section 87A, which was 12,500. And there's no change under old tax regime. What is the change in new tax regime? Last year, when your total income does not exceed 7 lakh rupees, there was rebate provided for 100% of tax payable or rupees 25,000, whichever is less. This was as per the current financial year 24-25. But now in proposed regime, this 7 lakh is increasing to 12 lakh. So rebate of 100% tax payable up to rupees 12 lakh. That is increased from 25,000 to 60,000 rupees. And there would be marginal relief will continue. So this is what the change coming out in section 87A for the rebate. Then only you will find that your 12 lakh rupees is not chargeable to income tax. So let's look at this particular slide. I'm just making comparison. If income is of 12 lakh rupees, if I compare the income tax as per the existing new tax regime, which is providing threshold of 7 lakh, no income tax, versus proposed one, where income up to 12 lakh, no income tax, how much benefit you will draw while comparing last year versus the proposed financial year 25-26. Left-hand side, I'm discussing the current tax liability versus the proposed tax liability. And according to the slab, I'm making the tax calculation, and these calculations are being done. So when you look at current tax liability up to a income of 12 lakh rupees, there was total tax liability of 80,000 rupees. Now it crosses 7 lakh. When it is crossing 7 lakh, then there is no rebate. So no benefit of rebate. When you look at the current tax liability position, so net tax liability as per current tax regime, current new tax regime is 80,000. Comparing the proposed one, White Union Budget 2025. Total tax would be 60,000 rupees, and when rebate is being applied under section 87A, then complete up to 60,000 rebate would be there. So net tax liability is 0. So if you make comparison of new tax regime as per current tax liability versus the proposed tax liability, you are benefited by 80,000 rupees. So this is making comparison. So this is what the advantage in the new tax regime when you're comparing with the current tax proposition versus proposed tax proposition. If you look at your income as 18 lakh, just make comparison of 18 lakh rupees. And again, I'm doing the calculation. On left-hand side, current tax liability. On the right-hand side, your proposed tax liability. So on 18 lakh, the total tax liability is coming 2,30,000 rupees. And there will not be any rebate because crossing over 7 lakh rupees. So net tax liability is 2,30,000 as per current new tax regime. What would be proposed? New tax regime, White Union Budget 2025, it is coming out 1,60,000. And here, important catch. If your income crosses 12 lakh rupees, then there is no rebate. You have to calculate your income tax as per the slab basis, the slab provided. Thereby, you are finding nil when I'm referring to relief under section 87A. So this rebate which is being given under section 87A with a condition when your income is up to 12 lakh. If crosses 12 lakh, then income tax to be calculated on slab basis. So with this calculation, net tax liability is 1,60,000 when we are considering total income of 18 lakh. Comparison, 2,30,000 versus 1,60,000. So you are getting benefit of 70,000 rupees here. Let's look at the higher slab. 25 lakh rupees. If income is 25 lakh rupees and you are making comparison with the current tax liability versus proposed tax liability. As per current tax liability, your total tax is 4,40,000 rupees, while comparing with the new proposed one, which is announced by Union Budget 2025, your total tax would be 3,30,000. You are benefited by 1,10,000 rupees. So this is the advantage you are drawing in this new regime. And Honorable Finance Minister has said that with this change, with this 12 lakh rupees, they have to forgone revenue of 1 lakh crore rupees. So what is our take on the matter? To me, 12 lakh means minimum 1 lakh per month in the hands of consumer. He will expense this money, consumption will go up. When consumption will go up, quite obvious, my supply to the economy will go up. So GDP growth, which we are targeting, we will be able to achieve. And Aam Aadmi will get more money in the hands. New tax regime, you can't claim any deduction, any benefit like 80C, 80D. There's nothing like that, which is available under old tax regime. So here is a catch. You would be thinking, should I continue with the old tax regime or I should move to new tax regime? I can tell you, you can do the calculation. And to my mind, if you do the calculation, you will find your new tax regime with the proposed one for the financial year 25-26 financial year. I'm not saying assessment year. I'm saying financial year. So April 1, 2025 to 31st March 2026, you will have advantage. And there is no point, submitting the documents proof for claiming deduction. And this point is also being discussed, lot of scrutiny, and income tax department has come across that for claiming deduction, many fake forged document are being submitted. So that is not required under new tax regime. So to my mind, this new tax regime is beneficial. And for salaried class, again, I can sound. You have alternative way. Let's say if you are into old tax regime this financial year, can you move to new tax regime next year? Possible. Can you do again? Yes, possible. Alternative. For business, one time. So this 12 lakh which we are considering, it is for all resident individual. They can work out everything. And salaried class, 12 lakh 75,000 with a standard deduction of 75,000. Having said that, there is a rationalization and amendment in TDS, tax deducted at source or tax collected at source in threshold amount. So I have jotted down, and this PPT would be available to all the viewers. But importantly, I'm picking up, when you look at TDS for interest, which is paid to senior citizen, it is increased from 50,000 to 1 lakh rupees. So up to 1 lakh interest, no TDS. And for all other cases, it is increased from 40,000 to 50,000 rupees. So individually, section-wise, we have narrated in this PPT slide, which would be helping you to understand. Rent. Honorable FM during the budget speech has said that no TDS on rent. If annually rent is 2.4 lakh, increased to 6 lakh. That is what Honorable FM has said. But when we are decoding the document, finance bill, it is not 6 lakh annually. It is 50,000 per month or part thereof. Of course, 50,000 when you do annually, it is 6 lakh, but it has got different meaning. Just to let you know that for a particular month, let's say you are letting out and there is 3 months only, and it is coming out 1,80,000. TDS to be deducted, even though annually it is coming out as a 6 lakh. No, you have to calculate as 50,000 per month or part of the month. That is what the catch in this provision. So you need to work out accordingly. 194J, when we are giving this amount to the professional, their limit was 30,000, now it is 50,000 rupees. And another important change, that TCS under section 206 capital C 1G remittances, TCS on liberalized remittance scheme by RBI as against 7 lakh, it is now increased to 10 lakh rupees. Some other important changes under income tax pertaining to TDS and TCS. There was one big, dispute on a transaction supply of goods, value more than 50 lakh rupees. Whether TCS applicable or TDS applicable. TCS by the supplier who is selling, TDS by the buyer who is making the payment. What is applicable? And confusion was there, which is being done away with. Henceforth, from April 1, 2025, there is no requirement of TCS on sale of goods by the seller. So clarity provided. No higher TDS or TCS when deductee is a non-filer of ITR. We were struggling that if deductee is not filing ITR, then there was higher TDS rate. But we were not knowing, and there was no information, the window available, whereby we can cross-check whether the deductee is filing ITR or not. So they are doing away this provision from April 1, 2025. So normal TDS provision going to be applicable. There was prosecution provision. If payment of TCS is not done by due date, but now they are saying that no prosecution provision, only condition payment to be made by due date of filing quarterly statement. So these are the good trade facilitation measure. Having said that, important change under ITRU. So after filing your original return, if you come across there is some income which you have not disclosed, you can file your ITRU. And earlier it was for 2 years, but now increased to 4 years. And there is additional tax liability to be paid. So for return file up to 12 months from the end of relevant assessment year, additional tax was 25%. For second year, it was 50%. Now this 2 years increased to 4 years. So for third year, it is 60%. And for the fourth year, it is 70%. Tax and interest need to be paid. Only condition that no investigation is initiated against the SEC. Startup. You know that startup sunset clause was expiring on 31st March 2025. Now increased to 31st March 2030, and they can get the benefit of income tax under section 80 IAC. It's a boost to startup. So a lot of announcement is being made for startup. Fund of fund is also being announced for the startup for 10,000 crore rupees, which is coming from MSME perspective. If you look at MSME, the definition of MSME is also changed in this union budget. For MSME, you need to be falling under either micro, small, or medium. And there's a limit prescribed, right? For turnover, 5 crore, 50 crore, 250 crore. It is increased to 2 times now. And for investment, it is 1, 10, and 50, which is increased to 2.5 times. So thereby, you can see that you can avail the benefit of being termed as MSME, micro, small, and medium enterprises. The classification pertaining to threshold, it changed pertaining to turnover and investment. Registration of trust. So, after 5 years, we have to again renew. But for small trust falling under section 12A, they have said is automatically renewal. And this is further for next 5 years. Only condition, such trusts whose total income does not exceed 5 crore for each of 2 previous years, they will draw this benefit, advantage, each of business trade facilitation. Certain other changes like assess annual value for one property was nil, but second property, they require to have declaration whether occupied for business purposes, employment, need not require. So it is now 2 self-occupied property, assessable value would be considered as a nil. Presumptive taxation scheme is being announced for the non-resident coming from out of India and supporting to set up electronic manufacturing facilities. And as per presumptive taxation, only 25% is deeming as his income on gross receipt and thereby paying the tax on same. Definition of virtual digital asset got expanded, and simultaneously reporting, specified reporting entities like bank need to report such transaction about details of crypto asset to the income tax department. Some few more changes, which is beneficial national savings scheme. Now interest is being stopped from 1st October 2024. So what is the essence of a national savings scheme? So if you withdraw any money, whether taxable, they have clarified if any withdrawal is being made up to the limit prescribed, then no income tax, you will draw the benefit, and that cutoff date is 29th of August 2024. Now NPS Basilia accounts, they have extended the benefit, tax benefit also. So this is what you're finding the last slide. Transfer pricing. See, transfer pricing, arm's length, arriving at arm's length pricing for a transaction which is being picked up, it can be extended for further 2 consecutive previous year if it is for same transaction, so that you get a certainty, a clarity. So this is what change in transfer pricing provision as well. So this is all from income tax perspective. Now I'm moving to GST scenario. What are the changes in GST? Let me tell you, clause 116 to clause 129 of Finance Bill 2025, there are the changes made for GST. So I'm going to discuss each of the clauses one by one with the corresponding change. So let's look at the first change. Input service distributor versus cross charge. Let me first give you the brief background so that you understand the meaning. Then I will tell you what is the change in the budget. Input service distributor means, let's say you're having a head office in Delhi and you're having 4 branches or 4 factories in different state. So altogether 5 units under same PAN number. So we are termed as a distinct person, right? Sometime, and we have seen that we are procuring common input services at head office, which is being used by other distinct person under same PAN number. So let's say you're getting audit fees invoice from your statutory auditor at your head office, let's say 1 lakh rupees. Now audit is being done for head office and for your 4 factory in different state. So auditor is charging GST and he's mentioning your head office address and everything. Question comes in our mind that head office can claim full credit of GST charge on that common input services by third party, which is being used by other distinct person also under same PAN number. There's a concept called input service distributor. So what you are supposed to do, you have to take a separate ISD registration that is different from your normal registration. You can avail the credit in your head office ISD registration, and then you need to distribute credit to your distinct person under same PAN number in terms of their utilization or turnover criteria. This is called ISD concept. But what is the meaning of cross charge? Cross charge is not defined in GST law, but simple meaning. Let's say at your head office, your CEO, CFO, common HR, accounts, IT team is sitting. Then question was whether HO is giving any services to the 4 factory or branches in different state, whether it can be considered as a supply. As per Schedule 1, Para 2, it is a supply, deemed supply, even though there is no consideration. This transaction is being considered as a cross charge. In cross charge, it is internally generated services, which has been given by head office to the branches or to the factory, 4 factory in different state. They are also distinct person under same PAN number. But conceptually, these are 2 different subject matter. ISD only meant for common input services, which is being procured at a head office, but utilized by all others, need to be distributed. It is common input service, but cross charge is something different, which is deemed supply. Para 2, Schedule 1, there is supply of service concept, even though there is no consideration. So being head office, you're giving services to your factory or to your branches in different state. They are distinct person under same PAN number. So that concept was available, chargeability exists, but we have seen in the past that a lot of us has not taken ISD registration. Input service distributor registration is not being taken. What we used to do at head office, we used to take credit and charge to our factory or branches, distinct person in different state. So we were not following ISD route for common input services of third party. Now you need to wake up. From 1st April 2025, believe me, this date is important. It is made compulsory that for distribution of credit of third party common input services, you need to get ISD registration done. You can't follow cross charge. So you have to differentiate cross charge under normal registration, ISD the separate registration. In ISD, the challenge was they were not able to pay reverse charge liability. But now it is being opened up. Reverse charge liability can be paid by ISD, including intra, and now they have included through this budget interstate supply of service. So ISD can pay reverse charge. Avail the credit in ISD registration and then distribute the credit to distinct person in different state and the same PAN number. Another important aspect which you should keep to your mind in ISD only is a distribution of credit pertaining to common input services. You can't distribute credit of input and capital goods under ISD. But in cross charge, of course, input and capital goods, including the input services, can be utilized for providing the services to distinct person. It is only deemed supply in terms of Para 2, Schedule 1, but otherwise is normal supply of service. You must go through circular number 199, dated 17 July 2023. For the past period, there was dispute. The circular clarifying if you have not followed ISD route in the past, no problem, we are not going to object. But henceforth, from April 1, 2025, you must and compulsorily get yourself registered for ISD for distribution of credit on common input services procured from third party. Another thing which is not the part of budget, but since I'm discussing the topic, let me draw your attention. Valuation for cross charge. In ISD, there is no question of valuation. 1 lakh rupees auditor invoice, he charged 18,000. 18,000 need to be distributed in terms of utilization or turnover ratio. But in cross-charge, valuation is the important one. So when you are a supplier of service as a headquarter and giving services to your own branches or factory under same PAN number, being distinct person, what would be the valuation? Rule 28, CGST rule. You must keep in mind the proviso, second proviso of Rule 28, Sub-Rule 1. If my recipient unit is entitled for full ITC, then a supplier head office can pick up any value which would be deemed open market value, even rupee 1, This is what the concept. If recipient is not entitled, then what happened? What would be the valuation? Let's say you're in a hospital. Hospital is exempted sector. Education, exempted sector. Recipient is not entitled. But GST leviable on deemed supply, which I've discussed. What would be the valuation? Valuation would be, now you need to understand that second proviso is not applicable. So either you have to pick up the total overhead cost, then apply the 10%, which is 110%. And next question, which is important, which we were looking for the answer, salary. Salary which is being paid to CEO, CFO, common HR and accounts team sitting at head office, whether salary need to be included in total valuation. Circular number 199 has clarified that salary need not be included. So to that extent, you safeguard the GST charge on the valuation. Now, whether it should be 110% or total overhead. If total overhead is identifiable, then of course I will suggest you total 100% overhead. Otherwise, you have to go pro rata 110%. This is what the first change, ISD. So they have made the change in section 2, subsection 61, read with section 20 of CGST Act and said that reverse charge liability can be paid by ISD on interstate supply, and which should be distributed to the distinct person under same PAN number. So this is the first change. Coming back to the next change. In 55th GST Council meeting, they have recommended that there are certain goods, they are prone to tax evasion. So they are losing out government revenue. So they wanted to introduce a very unique method, unique identification marking, so that they can do track and trace mechanism. So what are those goods which are prone to tax evasion? It is being heard in the market like pan masala, tobacco. As on date, they have not notified. As per section 148, capital A, they are saying that they are going to notify what all goods are going to fall under this unique identification marking, and what all class of person this provision going to be applicable. So they will identify and will notify in time to come. But enabling provisions are being made in CGST. So first of all, they have given the definition of unique identification marking under section 2, subsection 116, capital A. Read by section 148, capital A, which all goods are subject to, which all class of persons are subject to. They will notify. But what we have heard from the market, it is maybe pan masala, maybe tobacco. They will pick up the goods which are subject to tax evasion. And then what is this unique identification marking? Nothing. It is software generated. A stamp would be given, digital stamp would be given like barcode or RFID tag on the package of such goods. So once this fixation, unique identification marking is being done, it can be tracked and traced about their movement when goods are in movement. So with this movement, they will identify and then they can catch hold of any kind of evasion involved in supply chain. This is what the new change enabling provision. Notification will come out for what all goods applicable, who all are supposed to follow that. In case you are not following, they have prescribed penalty also under section 122 capital B, and they're clearly saying, in addition to all other penalty, there would be penalty of 1 lakh rupees or 10% tax payable, whichever is higher. In addition to all other penalty, there would be separate penalty for non-compliance of this section 148 capital A, unique identification marking. So this is the next change. Coming back to vouchers. Before I start this discussion, let me give you the background. Let's assume, and you try to answer by yourself. You're going to a shopper stop and you're purchasing a voucher of 5,000 rupees from shopper stop, gift voucher. First question will come to your mind and to my mind, whether voucher which is supplied by shopper stop for 5,000 rupees with a GST leviable. First question. And this gift voucher you can give to any of your relatives, any of your loved ones. And this gift voucher comes with a time period. So to whom it is being given, they can later go and buy any goods and services of their choice. Am I right? So this voucher was the disputed one. From July 1, 2017. I got the opportunity in the past and I represented to GST Council in the past and I said, voucher per se, there should not be GST. Why there should not be GST? Because voucher is nothing but looks like money or a instrument having actionable claim. It is more appropriately prepayment instrument. Prepayment instrument. What should be taxable? The underlying goods or services are supplied against that voucher. I also raised the concern before authority and said, sir, if you're taxing voucher, let's say 18%, and the person who got this voucher, he is purchasing goods of 5%, what is the implication? Would be double taxation and then rate variation, lot of confusion. Why can't you done away voucher from the GST? It is not chargeable to GST because voucher can be considered at most as a money or actionable claim. Since July 1, 2017, very recently in 55th GST Council meeting, which was held on 21st December 2024, they have recommended and said, voucher is neither a goods nor services. They have also said voucher is looks like money or actionable claim. It is more appropriately prepayment instrument. So voucher per se should not be taxable. What should be taxable? Underlying goods or services. And underlying goods, if 5% taxable, GST would be 5%. This voucher is only used as payment. So voucher is neither a goods nor services. Very good recommendation. And this was endorsed in a circular recently issued, circular number 243, dated 31st December 2024. Now, one item which I want to discuss with you, and you try to answer by yourself. And you can write your answer in the chat box also. Let's say if I'm giving you the voucher, I'm a shopper stop giving voucher for 5,000 rupees with the validity of 1 year. Now, this voucher which has been given to you, you have handed over to your loved ones. And they did not encash this voucher in a period of 1 year and it got expired. So what happened? There is no underlying supply. There is no underlying goods or services. no GST is being charged, not to pay to the government revenue. But 5,000 rupees is earned by Superstock. What happened to this 5,000 rupees? Whether chargeable to GST? Please tell me the answer, yes or no. How many of you believe it's chargeable to GST? Or how many of you believe not chargeable to GST? You can write yes or no in a chat box. And my answer is, it will not be chargeable to GST. It will be considered at most as a liquidated damage. Liquidated damage. And this position is being certified in that same circular number 243, dated 31st December 2024. So I'm not saying, but to tell you what is liquidated damage, by the way. See, when we enter into a contract, we enter into a contract for positive performance. We want to do the work. Let's say if I undertake some work to be completed within 1 year, my commitment I will complete within 1 year. I'm a contractor, you're a contractee. If I could not complete in 1 year, then there is a 10% penalty clause. So contractor will pay penalty to you, to contractee. Am I right? Whether GST leviable on such liquidated damage. First, no GST for the region. For the region, we never enter into a contract for non-performance. We always enter into a contract for performance. And in this 10% which is paid by contractor to the contractee, what services are being offered by contractee to the contractor? It is only violation of a contract terms. So I'm compensating loss to my contractee. No GST. And this is what the position when we are looking at voucher, which is not being encashed within the defined time period. So that is what the clarity in circular number 243. Coming to important one, safari retreats. You know, recent Supreme Court judgment, safari retreats on construction. Let me tell you the fact so that you can understand the subject matter well. In safari retreats, dispute was, let's say you want to get construction of mall done. You want to get construction of mall. I'm your contractor. I'm going to charge GST on construction of a mall, right? Question is, being owner, who is owner of a mall, can you avail credit? Because subsequently you're going to let out, commercially let out your mall shops on which GST chargeable. So your outward is chargeable to GST. Question was on inward, construction of mall, GST credit is available or not? Department disputed. They said no, credit is not available because it's a construction of immovable property. Honorable Odisha High Court has given favorable judgment. They have said when their outward is taxable, commercial letting out, then for seamless flow of credit, inward credit should be available to the mall owner. That was Odisha High Court judgment. When it has gone to Honorable Supreme Court, listen very carefully. While going through, the Honorable Supreme Court has made two good observations. First, on constitutional validity of section 17, subsection 5, clause C and clause D, which is barring credit on construction of immovable property. In clause C is a construction, works contract services for construction of immovable property, no credit except plant and machinery. And second exception was when it is your inward works contract services for your outward works contract services. So credit is available only when it is plant and machinery in subclause C. While reading subclause D, the big, and that is what the Supreme Court judgment, Supreme Court has said that the barring provision, credit not available, it is within constitutional power. You can't dispute it. But how it was argued before Honorable Supreme Court, and Honorable Supreme Court has held and given the judgment. Under subclause D, 17.5, subclause D, It is construction. Any goods or services or both used for construction of immovable property other than plant or machinery. Here is no plant and machinery. Here is plant or machinery. It was argued before Honorable Supreme Court Lordship, even though it is immovable property, but if it is working like a plant, then credit is available. And believe me, Honorable Supreme Court has agreed to this proposition. And relying on income tax judgment of Supreme Court Taj Mahal Hotel Limited, wherein plant is defined, plant means any mall, warehouse, or other building except hotel or cinema halls. So they said plant means mall. And this judgment was relied and said, yes, plant is mall, and thereby credit is available under section 17, subsection 5, clause D. This was the Safari Retreats judgment. So we have discussed when this judgment came, but recently 55th GST Council meeting, they have said and come out very openly, they have said they have entered into, and it was clerical error on their part. They never intended to give us the benefit. They only wanted to give credit when it is plant and machinery. So they have said they will rectify this mistake. And this is what the change in Union Budget 2025. Now, section 17, subsection 5, clause D, where it was written plant or machinery, now it is being made plant and machinery, that too retrospectively, from July 1, 2017. So those who were clipping, those who were thinking we got the benefit, it is all being done away with. So the advantage of Safari Retreats is no more. And they have said it is a clerical error, right? They have said clerical error. 2 points I would like to draw here. For department, GST department, since July 17, you are now saying it was clerical error, and you are correcting with retrospective date. We as a taxpayer, and you will vouch it, we as a taxpayer sometimes make mistake. Why we are being issued so-called notice under section 74? And all the time fraud case is being released. We are also true, genuine, honest taxpayer. For you, it is a clerical error, but for us, it can't be. First point. Second point, if we have taken credit on that premise that mall is a plant, which you are now correcting, is an interpretation issue. Supreme Court has said that mall can be plant depending on functional test. Can you invoke 74? Can you say there was separation? It is all interpretation, right? 74 cannot be invoked, but in all probable case, you will find they are invoking section 74. Coming back to the third component, which is again important for all of us together, what happened? The clarity now emerges that credit is not available on construction of immovable property other than plant and machinery. But I would like to draw one Supreme Court judgment of pre-GST era, Bharti Airtel. In case of telecommunication tower and prefabricated structure. Now, telecommunication tower is being, fixed up with the structure, civil structure made and screwed and tight. Can it be said it is immovable property? This was the dispute. And SSC has taken the credit. This was before Supreme Court, and Supreme Court has given favorable judgment. Favorable judgment. They have said now we have to see whether particular item is a movable one or immovable one. Just because telecommunication tower is being fixed up with the civil structure and foundation and screwed, it is not immovable property. It is not. It can be again opened up and then detach and then again move from one location to another location. So it's a movable one. Prefabricated structure, what happened? Prefabricated structure getting screwed, tightened up, and then structure is being built, which you can open up at any point of time, detachment, possible. And then it can be moved from one place to another place. It can't be immovable property. And credit is allowed. In pre-GST era, same argument exists in GST scenario as well. So you need to really look at those judgment. And even while discussing the judgment, Honorable Supreme Court has made observation, just because telecommunication tower is falling into exclusion of definition of plant and machinery does not mean that it becomes immovable property. Unless you showcase, unless with the functionality it is showcase, it is immovable. So interesting judgment must have a look into. But safari retreats is being done away retrospectively from July 1, 2017. Coming back to the credit note, next important one. First, you must understand the basic background so that you get more clarity. I'm a supplier. You all are my buyer. When I'm supplying, let's say for 100 rupees, I'm charging GST 18% to you. You as a buyer availing credit of 18%. Subsequently, I'm issuing a credit note. Supplier is issuing a credit note of 10 rupees that may be on milestone achieved, any discount, incentive or trade discount offered by the supplier to the buyer. 10 rupees, I'm charging 18% and raising the credit note. What happened in this case? As a supplier, I get the adjustment of tax 18% charge on 10 rupees with my outward tax liability. And you as a recipient, as a buyer, need to reverse credit of that tax component on credit note. You need to reverse. But you know, there was no mechanism available in the past. No mechanism. There was no mechanism available. That is the reason they have issued one circular number 212, dated 17 July 2023 for the past period. And they have said when there was no mechanism to check, a lot of so-called notices was issued for the past period where the recipient has reversed the credit to the extent of tax component charge on credit note of which supplier has taken adjustment. This circular was telling and saying that being recipient, you can issue a certificate if it is less than 5 lakh and more than 5 lakh, CA CMA certificate. This was for the past period. But now under section 34 subsection 2 as per Union Budget 2025, they have made the change. Now what they are saying, Bimal, as a supplier, you will get adjustment of tax component on credit note only when your recipient reverse the credit to that extent. And to ensure that if you're filing GSTR 3B nowadays, then it is automated. Credit note which is raised by the supplier, tax component charge on credit note, I get adjustment in the hands of supplier and automatically it gets reversed in your GSTR 3B. It is all automated now. Even through IMS, invoice management system, this is being captured, automated now. I do not know how many of you have seen invoice management system, which was optional from October 2024, but with this budget, enabling provision that IMS is going to be compulsorily. Section 38 and 39 corresponding change, which I'm going to discuss in the next slide. But for credit note, it is auto-captured in your IMS. What is IMS? I will take 1 or 2 minutes more so that you can understand. In IMS, being supplier, I'm going to file one, right? While filing one, my all invoices will be available to you as a recipient, which you can watch on IMS portal, IMS dashboard. You as a recipient need to take needful action, 4 action, accept, reject, pending, or no action. So if credit note is correct, then I am getting adjustment of the tax component on credit note issued by the supplier. You are accepting the same, thereby automatically there will be reversal of credit on your part, recipient part. Or you can keep it pending also. Is it possible, which I'm saying? Can you keep it pending? You can reject it, but pending you can't do. Pending you can't do. Either you have to accept or reject. Why you have to accept and reject? Because this transaction is being determining the tax benefit in the hands of supplier, reversal to be made by the recipient. So I'm saying that pending action cannot be taken on the credit note. Even any upward or downward adjustment on the original credit note cannot be kept pending. Reason is very clear. Reason is very clear. What is the reason for that? If as a supplier I'm issuing credit note, I'm getting adjustment of tax component with my outward tax liability, right? Subject to you reversed, right? If this transaction is left open for the pending, then I'm getting adjustment, but you're not reversing. So they're saying, no, recipient can't take pending action. They have to either accept or reject. So if you accept, then quite obvious, your credit gets reversed to the tax component charge on credit note. What happens? You reject the credit note. Let's assume you reject the credit note. Then on the particular month, let's say February month, I have issued the credit note. I got the adjustment. I got the, adjustment of tax component on credit note, which you rejected. Then what happened? The corresponding tax adjustment, which I got in February, will add it back in my liability of the March tax period. This is what the automated system they have brought in IMS. So pending action cannot be taken on original credit note or any upward or downward adjustment with the original credit note. It is all automated. You can watch many videos on my YouTube channel. Even on IMS, we did one program on Zoho books that is also available that will clarify how this IMS going to make our task easier with the automated route. Last question on credit note is financial credit note or commercial credit note without GST. Credit note in GST comes with the time period 30th November of succeeding financial year, and there is adjustment of tax component in the hands of supplier and reversal by recipient. But financial credit note, commercial credit note, no time period, no GST charge, and no adjustment is being taken by supplier. Do you as a recipient need to reverse? Answer is no. In that case, no reversal required of GST credit by the recipient. So this is on credit note. Coming back to the next provision like IMS, I say that this year budget is paving way for IMS. Section 38, relevant subsection got amended. And now they are talking about that recipient will get credit on the basis of GSTR 2B, which is available as per section 16, subsection 2. You have to match your credit availed in 3B with GSTR 2B. But GSTR 2B, either draft GSTR 2B, which is coming on IMS, or it needs to be computed. It is again IMS driven. So IMS is important one. You need to really watch this IMS, which is paving way. Even section 39 subsection 1 is getting amended, and they're saying that now department can restrict filing of your return with such condition and restriction as may be prescribed. So enabling provision that GST law can bring any stipulated time period, specified time period, any condition and restriction for filing of GSTR 3B. This provision they are amending, but let me tell you, these provisions are existing in direct or indirect mode. Look at one proposition which I'm telling you. We are facing a lot of challenge that being a recipient, you have paid the amount to the supplier. You have paid the amount to the supplier, and supplier did not deposit with the government exchequer. Happening, right? We are finding this challenge pan-India, that you as a recipient paid the amount to the supplier and supplier did not deposit. What to be done? Let me tell you. There are provision in the law which is already enacted and implemented on portal also. Go to Rule 59 sub Rule 6, which is clearly saying if taxpayer is not depositing GSTR 3B for the previous tax period, he will not be able to file GSTR 1 for the current tax period. So it is being ensured that he's filing 3B and making payment of tax for the previous tax period. subsequent. If there's difference between 1 and 3B, there may be a case your supplier 1 is 10 lakh rupees, but 3B only 5 lakh rupees. Doable? No way. Section 75, subsection 12. Effective from 1st January 2022, rate with Rule 88C. Effective from 26th December 2022. Any difference between 1 and 3B, you will get the notice. Why there is difference? Pay the liability. Go back to section 37. Unless you file your 1 for the previous tax period, you will not be able to file 1 for the current tax period. And there is a 3 years time limitation for belated filing of GSTR1. Even go to section 39. Unless you file 3B of previous tax period, you will not be able to initiate anything under section 39. First, you have to file 1 and then 3B, and there should not be mismatch. Section 44, annual return, 3 years limitation for belated filing of your 9, including 9C. So these are already implemented directly or indirectly, but now it is getting streamlined. But now IMS, one example I will tell you, and you will love to listen this argument. IMS is going to make invoice label matching, which was not existing until October 2024. They introduced IMS only in October 2024. What is IMS in a layman language? Listen very carefully. Very good argument. I'm a supplier. I'm filing my 1 by 11th of next month, right? 11th of next month. My invoices would be available to you as a recipient to watch. You will take action, either accept, reject, pending, or no action. You can watch my IMS video, which is available on my YouTube channel for more clarity, but giving you what is invoice label matching. Now, let's say I've raised the invoice shown in my 1, which is the correct invoice. It is belonging to you. You have accepted. Once you accept, it will go to your 2B credit. And from 2B, it will go to 3B for you. And what happened for me? It will go to, it is already in my 1, it will go to my 3B as liability. So my liability gets created on invoice label. And that I need to pay. I can't keep difference of 1 versus 3B. I've told you the provision 75 subsection 12, read with Rule 88C. So that liability to be paid by the taxable person. So invoice label matching is being done. So you can rest assured through IMS, you can always say to the authority that taxes are being paid by the supplier. It is visible to you, which was not available until October 2024. So advantage, IMS is really giving advantage to the level of invoice label matching. And I'm also giving a clue. If you are facing past period litigation, only because of invoice label matching, you can argue before the authority. Since this facility was not available, which got introduced now, you can't dispute my past period credit availment. So a lot of things which we can argue upon and discuss around. So this is the important one. Coming back to the most, and I will say you should wake up. Most critical change pertaining to GST in Union Budget 2025. You must listen this one. I mean, I've quoted in my YouTube on budget finance bill 2025 GST related changes. I made the video for 25 minutes, which was posted on my YouTube channel on February 1 itself. So I've said it's a draconian provision. Draconian provision. Why draconian? Listen very carefully. You are, let's assume, employee of a company, or assume you're a tax consultant, chartered accountant, cost accountant, company secretary, lawyer. There's one provision, section 122(1)(a). As per this provision, any person who is aiding, helping in committing any offense, and specified 4 offenses are being prescribed. Roman 1 under section 122 subsection 1, which is supply of goods or services without invoice. Roman 2, issuance of invoice without supply of goods or services. Roman 7, on which credit is being availed. Roman 9, ISD credit. So there are 4 specified offenses. So any fraudulent credit in the hands of company, if department allege you being employee, you being tax consultant, you are the person who is aiding the company and retaining benefit, they are going to levy penalty equivalent of that tax component. So very recently, a case came up before Bombay High Court. A so-called notice for the penalty. You know how much amount was there? 3,731 crore rupees. Repeat, 3,731 crore rupees penalty notice was issued to the employee who was a taxation manager, Musk Shipping Company. And he was alleged that you are helping the company in tax evasion, wrongful availment of ITC. So you have retained the benefit, you must pay up this penalty, along with all reversal, interest and penalty demanded from the company. So company will pay reversal, company will pay interest, company will pay penalty, and then you are being also framed under section 122, 1A, and there are so many offenses under section 122, subsection 1, where penalty allegation can be made by the department. Now, what they are doing, just listen, I will tell you, this particular company got the relief from Bombay High Court, then followed by Supreme Court. But what changes they have made in union budget, listen very carefully. We know penalty order is also being issued for violation of e-way bill under section 129, subsection 3. Any violation, 200% penalty. If you want to file appeal before first appellate authority, you need to make minimum 25% per pre-deposit. That is the provision under section 107, subsection 6. 55th GST Council meeting said, no, they want to reduce 25% to 10%. I was delighted. I said, oh, they are reducing now from 25% to 10% pre-deposit for filing appeal against the penalty order. I was happy about it. But now what happened in this union budget, finance bill, when you look at 107 subsection 6 and 112 when you are filing appeal before GST tribunal, that proviso they are amending, but proviso they are doing away the reference of 129 subsection 3. So there is no reference of 129 subsection 3. It is applicable for all penalty order, including penalty which is being alleged under section 122, section 122 subsection 1A, any penalty order. So same case, same employee case. That is the employee case. Who knows, tomorrow being chartered accountant, you may be alleged. Company secretary, you may be alleged. CMA, you may be alleged. And penalty notice is being issued to you. Director, you can be alleged. So what happened? They are saying 10% pre-deposit of penalty amount for filing appeal before first appellate authority. In the case of 3,731 crore rupees, then 10% pre-deposit would be 373 crore rupees. Just imagine an employee or a consultant, if he has to make pre-deposit of 10% of that penalty amount, where he will go. And most interestingly, there is no upper limit. And pre-deposit of penalty to be paid through e-cash ledger. You can't use e-credit ledger. You're not registered. If you're an employee, you're not registered also. So this is what they have made the provision. I'm saying draconian provision, no upper limit, payment to be made in e-cash. Now there's no reference of 129 subsection 3. It is applicable for all penalty order. Oh, amazed. But what happened in that Bombay High Court? In Bombay High Court has said that you can't issue so-called notice for penalty under section 122 subsection 1A, and reasoning was that the offenses which is being prescribed under section 122 subsection 1 is with reference to taxable person. So who is taxable person? Who is registered or liable to be registered? Since employee is not liable to registered, hence you can't levy penalty under section 122(1)(a). That was the point presented before Bombay High Court, and Bombay High Court has taken this reasoning to vacate that so-called notice, penalty so-called notice for 3,731 crore rupees. Can you believe it? And this is what they are making the law. Is it not towards ease of business? Otherwise, pre-deposit provision last year changed. They have restricted, the upper limit is 40 crore only. For first appellate authority, even for the second appellate, which is GST tribunal, only 40 crore rupees. But for this penalty, in the provision, there is no upper limit. So to my mind, it is going and tossing up. And I've shown with judgment, department filed SLP against Bombay High Court judgment, and Honorable Supreme Court has dismissed the SLP filed by the revenue. And they have said there's no reason, no cognizant reason why we should interfere. And it was proper reasoning order by Bombay High Court. At least that company got the relief. But what happened for all small taxpayers? Please wake up call. And this is a matter of representation from my side to Government of India. They must consider before passing this finance bill. And they must consider this provision and should be applicable only in appropriate cases. And there should be some limit. It can't be. And whenever we get so-called notice, by default, department used 274 fraud case, used to make everyone liable, director, employee, here and there. They want to collect everything from all. See, when you're collecting from company, tax, interest, penalty, why then penalty from other person? Is it not double and triple collection? Just raising voice. I'm not ready and willing to accept this change. And that is the reason I say draconian provision. You can write your comment in comment box. This is what my observation on this point. Coming back to the last change of GST. What is the last change? Supply of goods in SEZ unit by one person to another or free trade warehousing zone when it is within SEZ or free trade warehousing zone. It is not going out. It is within SEZ, free trade warehousing zone. Whether chargeable to GST, July 17 implemented. Now they have recognized it is neither a supply of goods nor services. A transaction of Schedule 3, Para 8, AA got inserted retrospectively from July 1, 2017. Good one. At least they have understood it's not chargeable to GST. But now the problem which is coming to my mind, what they are saying with the disclaimer, if you have paid the tax on this, then no refund would be granted. Oh. Very critical. I've seen in GST, again, I'm making my comment with humble submission. If somebody has wrongly paid taxes, which is otherwise not chargeable to tax, can you keep it? Is it not without authority of law, Article 265 to the Constitution of India? What you're doing? The guy who has wrongly paid taxes on which GST not leviable, which you're recognizing now with retrospective date, why can't you say that if anyone has paid the tax, he should be refunded back? You can't keep that money. It is unjust enrichment. Clearly violative of Article 265 to the Constitution of India. That would be my submission. It is pertaining to GST. So I'm through with the GST related changes. Now coming back to the last component, custom related changes. 2 more slides, and then we will have open house also. Rest assured, any question pertaining to Union Budget 2025 would be my delight to answer you back. So first of all, they are rationalizing custom tariff of industrial goods. So the first, they are removing 7 tariff items, only 8 tariff items are left out. So rationalization. Apply appropriate cess to maintain effective duty incidence, and thereby they will not levy more than 1 cess or surcharge. So SWS, social welfare surcharge, is being removed. trade facilitation under custom provisional assessment. Now first time prescribed the time limitation 2 years, which can further be extended by 1 year. Any importer and exporter are be given to declare some some mistake which they have done at the time of filing bill of entry. They can come forward and voluntarily declare and pay the duty component plus interest, no penalty leviable, subject to no investigation has initiated. Time limit for end use consumption of raw material and component under IGCR, import of goods under concessional rate of duty. It was time period 6 months, now extended to 1 year. Good change, laudable change. And even their monthly filing, monthly statement is now supposed to be filed quarterly. So it should be from monthly to quarterly, not quarterly to monthly. Please note this correction. Now on domestic manufacturing and value addition, what they have done, they are also advocating make in India, and first time they have said make for world also. So you should make in India and made for world also. So particular sectors are being identified. First important one are clinical and hospital, cancer medicines, life-saving medicines. 36 medicines are now BCD exempted, and 6 drugs are now concessional rate of 5% BCD. Even patient assistance program, wherein these medicines are being provided, BCD is exempted. So it's a good proposal and good change. For mineral, critical minerals are sought in India, so their import, BCD is going to be exempted. Electronics, like when we talk about LCD and electronic goods, BCD exempted on parts of open cells. Shipping company, lot of manufacturing is being done in India. So BCD is exempted on parts, component and raw material, and further time period extended from 5 years to 10 years. Even capital goods imported for manufacturing of lithium battery, EV battery, mobile battery is exempted. This is what on value addition and domestic manufacturing. So from union budget perspective, all the pointers which is coming from income tax, coming from GST, coming from custom duty, I have completed. I have tried to give snapshot, and this PPT, believe me, going to be available. I given my contact details with the email ID. You can note down anything which you can always come back to us. So let me stop sharing so that I can come on main screen, and then we can discuss. Just allow me. Okay, so this is all from Union Budget 2025 perspective. So I've tried income tax this time. So all the time when you come on this Zoho Books platforms, I take up only GST related, but this time we have drawn even the changes from income tax perspective. Hope you have liked this changes which we have discussed. And of course, I'm open now for any query which you can post. Request my friend Hers from Zoho Books to take it forward. Hers, please start.
Hi, Bimal sir, and hi everyone. We are really glad that all of you sat through this informative webinar, and I'm sure it was really eye opener for you all. So now what we'll do is I'll give sir some 30 seconds, 40-second rest, and I'll start dictating the questions. So sir, whenever you're ready, do tell me, and I'll start dictating the questions.
You can start, no problem.
All right, sir. So I am going for the first question. So Pranav asks, can individuals change themselves from new to old regime?
It is possible for salaried class. I've responded back also. It can move from new to old to new, till the time old is continued. So you can cross-check. For salaried class, no bar.
All right. So now Damodaran Vijay Kumar. What happens if my salary income is rupees 8 lakh and income from house property is rupees 3 lakhs?
So house property income is not special rate. It is normal slab. It is less than 12 lakh rupees. So proposed financial year 25-26, no income tax, subject to section 87A rebate to be claimed.
And HS adds on to that question saying, what about corporate tax?
There's no change in corporate taxation, only change in personal income tax, which we have discussed in our deliberation today.
Right. Gadam Sudhakar says, what about NPS in new tax regime?
See, this is a small change they have made. Partial withdrawal exempted. That is what they have said. But new tax regime, nothing they have stated specific for NPS. Basalya scheme only for the old regime this they have referred.
Shweta Upadhyay says, if a lawyer has gross receipts of INR 23 lakhs and he opts for presumptive taxation scheme under section 44 ADA, then how much tax will he be liable to pay as per the new budget 25 slabs?
See, ultimately this is crossing 12 lakhs rupees. So presumptive taxation for professional as applicable depending on the digit, your transaction, cash versus banking transaction. The percentage will come out. So you have to look at whether your receipt coming through digital mode or coming through a cash mode. Then only you can arrive at your presumptive taxation accordingly.
Arthi asks, sir, can you please explain once again 194 TDS on rent?
Simple, it was 2.4 lakh rupees annual, which is now 50,000 rupees per month or part of the month. So annually, of course, looks like 6 lakh, which was stated by Honorable FM, but that is not the correct proposition. It should be considered 50,000 rupees per month or part of the month. So if it is crosses more than 50,000 per month, then of course TDS is going to be applicable. This is what I discussed. So don't look at annual perspective for proposed regime. Proposed changes for financial year 25-26.
All right. So Hardeep asks, sir, whether ISD will pay for reverse charge and issue invoice, or what will be the mechanism?
ISD will simple pay Hardeep reverse charge liability as applicable for normal registration, and then credit to be availed and then distributed as normally done by ISD for other common input services procured from a third party under forward charge.
Sanjay Hazrika says, re-explain 194 changes. I think, sir, you have re-explained. So
Sanjay, nothing. As against 30,000 rupees, it is 50,000 rupees. So TDS to be deducted when a transaction, the threshold amount is exceeding 50,000 rupees in a whole year.
Hardeep, sir, certain superstore issue voucher for advance receipt for service. What will be the taxability in these cases?
Superstore issue vouchers. Hardeep has said the voucher neither supply of goods nor supply of services. So believe me, if they are charging GST, you should ask them why GST. So GST will not be chargeable now on issuance of voucher, neither as a supply of goods nor supply of services.
Lalit Anand, could you please explain amendment with respect to ISD?
Lalit, I have discussed at length in the beginning, so please watch this video when uploaded once again on YouTube channel. It will take little time. So just simplicity, ISD, nothing but an input service distributor who is procuring common input services from a third party, and that credit is availed by ISD need to be distributed among distinct persons under the same PAN number, broadly.
Rohit asks, what is time limit to accept or reject credit notes?
Till the time limit of 16 subsection 4. That is the time limit maximum. So October of succeeding year would be the time limit.
All right. So let me this question. Okay. So Hitesh Divierwala asks, sir, my question is on under section 73, wherein tax was already paid before issuance of SCN, but interest paid after 30 days from the date of issuance of SCN. So whether penalty under section 73 by 8 shall be levied or not?
If you have paid the taxes, then interest you're referring to, but please try to appreciate interest is calculated from the due date till actual date. So before issuance and after issuance, how it is making difference, I do not understand. Of course, for penalty, you can talk about. So whether you're talking about interest paid after 30 days, if interest is being paid, they are disputing under section 73 subsection 11. But to my mind, that can be debated, Hitesh.
HP is asking, sir, this is regarding IMS. Ineligible credit under section 17 of June 24 is reversed in June 2024 under GSTR 3B. But corresponding to the said invoice, a credit note is received in November 24. This is showing in IMS and I need to accept. How to file in GSTR 3B, as this will create double reversal.
So this is, Umesh, you are reversing before the credit note is being received. So this should not, see, that is what they are thinking should not have been done. So maybe it is advisable reversal to be done only when credit note issued by the supplier. So corresponding automated transaction can take effect. But this is a transaction differently. So 3B, some manual addition need to be done, but with intimation to your jurisdictional officer.
So Subrat Mohanty asks, POI not submitted. Shall it consider a new tax regime automatically, or tax will be computed as per old tax regime with higher rate?
It is going by default, it is new is being picked up. So by default, it is new picked up. So it is not going to be calculated under old unless otherwise you have selected the same.
But sir, marginal relief, explain with example if salary is 13 lakh.
Simple, Ahmed, to the extent, see, tax component should not exceed the income exceeding 12 lakh rupees. So to the extent income more than 12 lakh, tax component should match. That is called marginal relief, which was there in 7 lakh scenario also. So there was some figure of 7,27,774. This was a break even where income and tax component matches together. That is how need to be calculated on 12 lakh rupees. So this marginal relief, which was existing in the new tax regime, as I said, 7 lakh was the threshold limit, no taxation, but with the marginal relief, it was 7,27,774. Similar, like you have to calculate for the 12 lakh rupees in the proposed this financial year 25-26. I've not calculated, but that is how need to be calculated.
Jethwa, I have uploaded genuine credit note on GSTR 1 and it was rejected in GSTR 2B by recipient through IMS. Do I have to add back liability in GSTR 3B? If yes, then it would lead to difference in GSTR 1 and GSTR 3B.
If he has rejected, Mohit, if your recipient has rejected, then you can't take the adjustment. So through IMS in subsequent period, if you have taken the adjustment in previous tax period on a credit note issued, which was rejected by your recipient, then this component will automatically added back in your tax liability of subsequent tax period through IMS. So it is getting done automatically through IMS. To that extent, prior to IMS, you need to make correction and amendment while filing your 3B.
Anand Ballab asks, dear sir, in October 24 month, few bills were in 2A but not in 2B, and we did not generate IMS for this month and filed for GSTR 3B. But now ITC of these bills is not coming for claiming ITC. Numbers of mail exchange with GST in help desk, but no result.
And 2A is not determining. You have to look at 2B effective from 1st January 2022. So unless the corresponding invoice, which is not auto-populated in 2B, you can't avail the credit. So you have to go back to your supplier and talk to them. Unless it is auto-populated, credit is not available. 2A is only for the guidance sake, not for credit. For credit, the fifth condition under section 16, subsection 2 introduced from 1st January 2022, that it should be matched with 2B.
Subrat Mohanty, in buyer's portal, IMS will reflect in real time or will show after pushed into IFP by the supplier?
Ultimately, it is on real-time basis. Even before filing one, you can view the invoices. But any action taken on invoices which is not filed by GSTR1 is again open to you for your subsequent action. So once supplier files GSTR1 And if any action taken thereafter, that is the final action. But again, it can be superseded till the time 3B is being filed by you. So that is how the proposition. In a save mode, you can see it and take the action, but that can supersede it once 1 is being filed by supplier, then again take action. And that action can again be superseded until you file your 3B being recipient. So that is how IMS process need to be learned thoroughly.
Sir, so we have crossed 15 minutes of questions. How many questions should I ask you more?
Maybe 1, 2, 3. From below, you can take 1, 3, 3 more, whatever. Or
Okay.
you can take from top, those who have sent. Maybe
Okay,
Prakash under section 18A.
Yes, under Prakash, under section 18A, how to
18A.
specific form for short levy duty pay and how to claim IGST what?
This is again specific, Prakash. I need to get more factual for answering. I'm just putting my disclaimer. I'm not clear about what is the factual position, so not able to comment on.
Anand Ballab, dear sir, in October 24 month, few bills were in 2A. I think this was asked, sir.
Yes.
So Kasturi Ranjan L. Hi, sir. We need your guidance in the following matter. In October 24, 7 invoices appeared in GSTR 2A but were not reflected in GSTR 2B. It is still not reflected in subsequent month of GSTR 2B. Kindly advise how to proceed on this matter.
You can't take credit unless auto-populated in 2B. So there may be a region that white is not getting auto-populated. Raise your concern, raise your ticket, and ask to the GSTN whether the technical glitch, if it is coming in 2A, white is not coming in 2B. So there may be a technical glitch, but you must cross-check. But credit only when it is auto-populated in 2B. So that is how you have to be very careful. If you are sure that the invoices are being shown by your supplier, he has paid the taxes, these are the factors need to be cross-checked, because 2B is now all dependent upon payment of taxes by the supplier.
Mohit Jethwa asks, my total income is 15 lakh, salary income of which salary income is 11 and capital gain adds to 4 of it. Will I get rebate?
For capital gain, you have to exclude it. It is special rate applicable. You have to pay the taxes on capital gain as a special rate basis, and 87A comes with the total income of 12 lakh rupees. So to that extent, they're the rider.
Okay, last question for the day by Chetan. Sir, now onwards, whether ITC is available or not on construction services.
No problem. No GST on construction of immovable property other than plant and machinery. Even plant and machinery, they're the distinction which I discussed, movable versus immovable. So just because immovable, it need to be proven, like we discussed telecommunication tower. We discussed prefabricated structure. On the face of it, looks like telecommunication tower immovable, but it is not immovable. It is used as a foundation. It is set up on a foundation and screwed. So it's a movable. But otherwise, if it is immovable, no credit available.
Sir, and all the attendees, with this, we have come to the end of today's very important session that we all needed to cover. And thanks, Bimal sir, to have taken his time out of his normal routine of GST webinars that we do. So from Zoho's team, Zoho Books team, warm thank you to you, Bimal sir.
Before we say goodbye to each one of you, let me say 1 or 2 words to all the participants. You have taken out your time and we have tried our best. We have given glimpses on changes under income tax, GST, and custom. We are taking this initiative forward. Ultimate objective is walk the talk, sabka saath, sabka vikas, sabka prayas. So keep trying good work, and that is how we can help each other. Helping each other means do good, good will come back. And that is what I'm learning in my process, and request each one of you to take a lead in this regard and do your best at all times. God will take care of ourselves. God bless all of us together. Thanks for watching. Stay tuned. Thank you very much.
All right. And before we finally conclude, we have another news with Bimal sir. We will all be meeting in Nagpur on 21st of February. The details will be showcased on Zoho Books social media channel and A2Z Corp WhatsApp group as well. So stay tuned for that. And again, thank you for all of us who joined. Thank you, everyone. Thank you, sir.
Thank you very much. Thank you.